A very active start to the week. What's going on, guys? It's Ricky. Hope that you guys are all having an amazing Monday. Today's November 3rd, and let's go ahead and quickly talk about what it is that's going on. So market opened up in the green. It's still in the green, but price action has been quite bearish. From the moment that the market opened, we saw a quick little bull trap, then followed with lower lows and lower highs. We found a support right around 630, if you want to call it that, for QQQ. It's coming back up to retest the moving average. We'll see. It looks like it's going to get rejected and then come back down to retest, or if it breaks above and begins to recover. For those that do not know, what companies are reporting earnings today? Palantir and HIMS, after the market closes, are the two big names that a lot of people are watching today, especially Palantir. I wanted to ask you guys, I don't have to, but if enough of you drop a thumbs up on this video, if you guys get over 500 likes, I just want to make sure enough people show up. You guys know the deal. Drop a thumbs up, get this video to over 500 likes, and make sure you subscribe to the channel so YouTube notifies you when it is that we go live. Palantir is a lot of people's focus today. It's not mine. I want to see how HIMS reports earnings. It's one of my favorite stocks to short, but it's incredibly oversold based off of recent ranges. I'll explain in just a little bit. First, before I even get into my opinion, let's quickly talk about what is the expectation for these two companies today. HIMS is expecting to report EPS of 9 cents per share, incredibly low. When it comes down to revenue, $580 million is what it's expected to report based off of its previous earnings report. It came in lower than what was expected. I wouldn't expect anything more this quarter, especially with guidance of how medicine and these treatments are supposed to be cheaper under the Trump administration. I don't understand how guidance can in any way be better for HIMS. Just my opinion, just my thoughts. If you think otherwise, then I respect that. I'm just sharing with you my opinion. Palantir, one of Wall Street's favorite tech company of 2025. Earnings per share, 16 cents per share. Revenue expected to be at $1.09 billion. I want to remind you, again, a lot of people love Palantir, but in my opinion, and it's just my opinion, it's like when this bubble, if it is a bubble, pops, Palantir is one of the biggest takers, right? It's at $200 per share. It trades at a market cap of nearly $500 billion, yet it makes, if I'm not mistaken, less than $5 billion in revenue a year. Let me pull it up real quick. I'm using Investing Pro. If you guys ever want access to the software, it's the first link in the description down below for a quick little discount. That being said, it trades at a PE ratio of 633 times its earnings. It has revenue based off of its previous revenue, right? 3.4 billion. I think it's going to be closer to 4 to maybe almost 5 billion this year. But it has a net income of less than $1 billion. But yet it's worth $500 billion. Do you see the disconnect there? Oh, Ricky, but we're investing into the future. I get it. It looks attractive. If you click on the PLTR Pro Research, I see the revenue growth. I see why it's attractive. Guess what? If a potato chip seller makes $1 million a year, that's great, but that business is only worth so much. Why is it that you are valuing this business at so much more than what it's actually producing? Like, that's the part that I just don't understand. It's like, people are so okay right now with paying a premium to own this stock when its projected earnings are not even close to like its current valuation. And that's years from now. So don't get me wrong. Its growth is amazing. It is leading to some degree in this AI revolution. Sure. But again, it's like these are businesses. And these businesses not only have to produce revenue, but then what's their take home for investors? Now, I just feel like enough people are, fearing that they are missing out or missed out on PLTR, that they're choosing to jump in at these elevated levels. And don't get me wrong, with irrational valuations and irrational markets, it supports these irrational valuations. It wouldn't surprise me that if PLTR, blows it out of the water today, if it can shoot up another 10 or 20%, that wouldn't surprise me at all, right? Like, it's kind of the theme of 2025. If you have a really good story, great momentum. And it just looks like all these AI partnerships continue to happen. I mean, today, OpenAI announced a new partnership of $38 billion with Amazon Web Services. How does a company account to, or agree to pay $1.4 billion in deals, Yet it's a company that makes less than $15 billion in revenue. I don't know if I said that correctly. $1.4 trillion in deals, yet it only makes $15 billion in revenue. There's a huge disconnect there. But it's AI. And that's what everyone keeps saying. It's like the shiny new toy in Wall Street. I'm interested to see how long this lasts, because how valuable is AI to the average American person? I get it that it's very valuable to these tech companies, and that's why there's a lot of forward investment into them. But note one thing, almost every one of these, except for Jensen, who's the leader of NVIDIA, the CEO of NVIDIA, but Sam Altman, the leader of OpenAI, Mark Zuckerberg, they've made it very clear that they could possibly be over-investing. And what happens if it comes about that, we do enter a recession, they have over-invested, and it's not everything that everyone expected it to be. They're over-investing in the hundreds of billions. That's why these valuations are so high, because these huge trillion-dollar tech companies are making deals with one another of, they're contingent on these deals. But if these deals end up following through because they haven't fully fulfilled themselves, right? I would be very interested to see how then markets react. Is that the pop of the AI bubble? Something to keep a close eye on. But as of right now, again, a lot of high expectation for PLTR. And I get it. It's very attractive, has very attractive growth. But just remember, you're investing into a business. And if you're okay with paying a premium, then I'm no one to discourage you to buy whatever it is that you see value in. I just want to remind you, you are paying 633 times of what this company actually earns versus what it's actually worth. Remember, these are businesses, and this business doesn't make much money in comparison to what it's valued at. That's all I'm here to remind you. That if you're taking a trade, which is short-term intentions, I get that. If you're taking an investment, I'd be careful at these overbought levels. I know a lot of people that are invested in PLTR at 20, 30, 40, 50, even $100 per share that would never buy at 200 simply because it's not a good deal. Again, that's as an investment standpoint, not talking about a deal. Don't get me started with HIMS. HIMS is one of my favorite stocks to short, but the reason I quickly wanted to talk about it was because of how oversold it is. The reason I kind of stopped shorting it is it kind of has this range that it trades at. I don't know if you guys, I've explained it to my LPP team already. It has these overbought and oversold levels. Anytime that it reaches kind of like $60 to almost $70 per share, I love shorting it. It's like free money. It's like when MSTR goes to $400 per share, it always gets rejected here. It's way too overbought. And then it retraces and finds its support at $40. This is why I'm no longer shorting it. It's too close to a support. Yes, it could continue to drop. It's just not worth the risk if it does begin to recover. Again, during irrational markets, they support irrational valuations. It's best for me to just play it safe and respect it. So today it does report earnings. I'm interested to see how the market reacts. I hope that it pops up. I would love to see it push up to $70 per share, wait for it to peak, consolidate, and then form a reversal, and I would love to short it. I took 2 shorts today. QBTS made a little bit over $3,000. I left a lot on the table with this one. I was really late to it. Took a short, sold off, took profits, still selling off. So very happy to see it. But again, when in doubt, never be afraid to cash out. It's a nice little pullback, but possibly in the very early stages of a nice little retracement. The other one that I have right now is Amazon. Amazon, the reason why is based off of the news. The news that, again, it is partnering up with OpenAI. I think it's a great catalyst-based event. It drove the price up. I saw the consolidation, the lack of progress on the upside. I saw it as an opportunity to possibly to short as markets began to de-risk. But quite frankly, I'm kind of wrong in the sense of out of everything out there right now, it's not the most lucrative opportunity. There's really not much progress onto the downside. I'm up, $1,000, and that's fine. But it's really not much in comparison to what I could have made focused if I focused my attention on stocks that were actively dropping. Like one stock that we called out today in our live trading session with the LPP team was Irene. I'm sure some of you guys already saw the news. Irene announced the possible partnership of secures a $9.7 billion AI cloud contract with Microsoft. Huge news. Drove the stock up price like 20, 25%. And when the market opened, it was up like 20 or 21%. It's been selling off since then. It's only up 8. Think about that. That's a 12% sell-off. The reason I didn't want to short it is, again, Irene is inherently risky. It's a very volatile stock. I don't know. I chickened out. I think that's the best way that I can put it. This is definitely the one that I have FOMO on the day. It's beginning to slow down, showing signs of a support. It could begin to recover just as much as it could sell off. I would say that this short would be pretty much done for me today. So I'm still waiting to see what happens with Amazon. If we end up getting the confirmation of a reversal and begin to gap down, it seems like we had early stages of that, but then it quickly began to recover. So I'll do my part in keeping you guys up to date. Again, PLTR, HIMS reporting earnings after the market closes. Just wanted to do my part in keeping you guys up to date. A lot of partnerships being announced, but I want to remind you that's all great news in the short term. But remember, what actual value do these companies bring to our day-to-day lives? If we do enter a recession, these and the most overvalued companies are always the ones that are going to experience the largest downturn. That shouldn't scare you. That should just make you aware of the big picture. So you shouldn't be afraid to take advantage of opportunities that you see potential in. Just be mindful that if they do retrace, that you can simply tolerate it. That's all I would encourage you to do. Don't be leveraged at overbought levels, meaning don't buy, trade, or invest with money that's not actually yours, more than what's yours. So wish you guys nothing but the best. Hope that any thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. If you want to watch me trade live as soon as tomorrow with the LPP team, second link in the description down below. Take care, team.